All right, our July read on housing starts. A bit of a disappointment. 1.191 million seasonally adjusted annualized units. This follows a slight downward revision from 1.241, which gives you really the picture there, just sequentially how much weaker it is. That is the lightest number since February. It looks like February of this year when it was 1.149. Let's go to permits, shall we? Permits are the opposite. They're a nice surprise. 1.336 million seasonally adjusted annualized units. We're expecting a number around 1.27. Sequentially, that's up over 8% from our last look, which is upwardly revised. Ended up at 1.232. So that was a solid number. Wow, very solid on permits. So doing it down and dirty, it looks like starts sequentially was down about 4%. Permits was exactly the opposite times 2. Response in the market, actually not so much. We're still down under 2% in a 30-year bond. The shots, the 2-year in Europe, it was minus 90 plus today, on its way to 100. September 12th is their meeting. My guess is it'll get ever closer to that level. The big surprise really for the last month, in my opinion, has been the ongoing strength in the dollar index, which is just closing in. Remember, the highest level it closed at since May of 2017 is right around 98.5. Getting very close to that. And I think that helps underscore and put in perspective the counterintuitive nature and how markets respond to central banks gone wild. Becky, back to you.
All right, Rick, that's a lot to digest. Stay right there. We're going to bring in Diana Olick and Steve Liesman for more on this right now. And Steve, why don't you tell us what you think very quickly?
You know, I'm going to defer to Diana.
Okay.
She's nobody's better on the details of this report than Diana. I have a macro point to make, but I'm going to let Diana give us the details.
Diana?
Okay, I'm going to go micro here. You always have to separate the single family versus multifamily, and this was a report. So you see starts down 4%, but single family, which is most important to the housing market right now, up 1.3% month to month and up nearly 2% year over year. And we've seen single family starts down for the first 6 months of this year annually, and that was a problem. Builders were saying that they were trying to deal with the backlogs from last year because sales were so weak at the beginning of this year. Sales started to pick up this spring. Now you're seeing the starts start to pick up. And again, in the building permits, that's also a good sign because that's future starts and future sales that we're going to see. And a lot of that a reaction to those rock bottom mortgage rates we're seeing right now, still falling. I spoke to the CEO of KB Home last week. He said mortgage rates really do play into this, and they are starting to see a lot more demand, a lot more traffic through their model homes. So that's a good sign going forward. Again, these are a little bit backward looking, but I would say that don't look at that big picture. A lot of it driven by multifamily down, which, you know, we've got multifamily is very volatile. It was way up last month. It's a little down this month. So multifamily, I would put aside for a minute and look at that kind of nice gain in single family starts.
All right, go big or go home, Steve.
Yeah, the point I was going to make was I look at this number to know how sensitive the housing market is going to be to lower rates. If I look at the headline, which Diana told me not to do just a second ago, I get like, you know, maybe it's not so sensitive. If we have this big decline in mortgage rates and they're not building homes, but the permits is possibly a good sign. If we could get a little bit of juice, I guess is the best way to put it, from the housing market, given other things like manufacturing coming down, and you get beyond, right, Diana, beyond refi. Refi is good because it gives people more money from a macro standpoint, but the real money comes from building homes and people buying new homes. That's where you get the best.
And part of refi is renovation as well, and that adds to the economy.
Sure.
But what I think the real key here is going to be, though, is consumer confidence. Because you can talk about mortgage rates as much as you want and how that helps affordability, and that's all wonderful. But home prices are still very high. We still have very low supply. And it's all going to be about that consumer confidence picture. Because if you think we're going to a recession and you think maybe you might lose your job or you might not get that raise, are you going to make that single largest investment, or are you going to move up to that bigger house if you're a little bit worried about your own personal finances?